How's it going, people? I've done a bunch of videos on cars with cheap insurance or how to get cheap insurance as a young driver, and the main thing that I've realised is just how much of a myriad insurance can really be. I mean, I literally found that my insurance was more expensive by a few £100s with my real name than with my nickname back when I was 17 looking to get insured. So recently I've been thinking about all the factors that affect car insurance, and as expected, it's incredibly complex. So I'm going to do my best to first explain just how complex car insurance prices are, followed by some key factors that will affect your car insurance, and to finish I'll give you my advice on how to get cheaper quotes, particularly as a younger driver, based on some research I did back in 2019. Remember to hit the like button if you enjoyed the video, comment as well down below to let me know your thoughts, and subscribe for more weekly car content. But without further ado, let's get into the video. Car insurance is generally based on risk calculations. Insurers will look at how risky an individual is before they decide to offer them insurance, and before they decide what price they should offer. When I say risk, I mean how likely the person is to make a claim on their insurance and how much that claim is likely to be. So if an insurer thinks it's unlikely that you will make a claim, and even if you did, it wouldn't be an expensive payout for them, theoretically your insurance premium would be lower than if the insurer thinks that you are likely to make a claim and it's likely to be expensive, as very crudely shown by this very basic and oversimplified graph here. Top right box and you're paying big bucks for your insurance, bottom left box and you're paying minimal bucks for your insurance. So how do insurers calculate risk? In reality, it's probably a professional that specializes in the measurement and management of risk and uncertainty, otherwise known as an actuary, that's calculating the risk based on extensive statistical data that will look into way too many factors for me to go through in this video. I will talk through some of the key ones that I found to affect price later, but honestly, the statistics actuaries will use will be far more in-depth than you can imagine, looking at age, location, time of day you might drive the car, where you might be driving to, where you park your car, how much the car costs, what year the car is, what make the car is, what model the car is, what color the car is even, what your name is apparently, etc, etc, etc. They will basically want to get hold of all the information they possibly can to form the foundations of their risk analyses. Then on top of that, they will need to see historical insurance claim data to compare all of those factors to. Now that's not even the complex part. Once they have all the data that they need, they will apply mathematical models which have been developed over 300 plus years of actuarial science to give everyone an insurance score of some description. In simple terms, some kind of suggestion as to whether you are likely to make a claim and how much it's going to cost. Now those models won't just look at each individual factor I mentioned on their own, it will look at all of them and how they interact with each other to create the most accurate risk profile for someone. So that means you almost can't take any one factor on its own and say that it's important for insurance, because that factor has to be considered in the context of every other factor in the risk calculation. This is why you can sometimes make an insurance quote, change one small detail and get hugely different results. Not because that one factor made your quote go up, but because the new risk profile is wildly different. That would explain why changing my name made such a difference to insurance quotes. Names were clearly one of the many factors in the wider insurance calculations. Now there are some factors that have to be omitted here in the UK, like some protected characteristics, for example gender, but in general this is what makes a risk profile for you. Now once insurers see these risk profiles, they will have different risk appetites. If an insurer has a higher risk appetite, they will be more likely to provide insurance to people that are considered to be more risky after all those risk calculations have been done, but they will obviously want to reflect that with higher quotes. Higher quotes also help to minimize their risk, as they are making more money per risky person. That means it's a risk-reward scenario for all insurers. How much risk are they willing to take on for the sake of making sweet bank? Some insurers will have really low risk appetites and just insure people who aren't likely to make claims and give them really low premiums, and ultimately make money by the fact that they have minimal losses as a result of fewer people making expensive claims. A crazy insurer would take on super high risk profiles and give them really low insurance prices, not too dissimilar to what caused the 2008 financial crash. Basically, you're unlikely to find an insurer like this, and if you did, statistically they would be exceptionally likely to go bust very quickly. But it's important to remember that prices won't always be stuck to risk profiles. Insurers might have a minimum charge that they give to anyone below a certain threshold, or they might give you a discount for being a friendly customer and giving them a call, or they might not give you a quote at all because they don't insure your area specifically, not because you personally are risky, for example. So too long, didn't watch, some people do maths, this tells insurers how risky you are, they provide you with a quote based on their risk appetite. Now, based on my own personal experience of making insurance-based videos for 2 years now, these are 3 variables that you can play with that I've found to consistently make the biggest difference, particularly for younger drivers who tend to have higher quotes. This is not including age, by the way, as you can't actively change your age, so kinda useless information. Remember, I've just spoken about the complexity of risk profiles, so these will not work every time, but they seem to work pretty much every time I do a quote. Number 1, putting 2 additional safe adult drivers on a quote is generally beneficial if you're under 25, particularly at lower ages. I found adding 2 safe adults to a 17-year-old's insurance consistently took the price down by around 17%. Number 2, location is absolutely key, and it seems to be an insanely important factor in the risk calculations, but I don't mean like Manchester versus London, I mean literally as granular as street to street. Looking at it more broadly though, I found that it is almost half the price to insure a car in Bath as it is in London. Specifically, I looked at Oldfield Park in Bath and Southwark in London, and literally London was almost double the price with no other variables changed. Of course, this is likely more than location, it's the total risk calculation behind it all, but still madness. Number 3, mileage appears to make a pretty big difference to quotes too from my experience. From 1,000 to 3,000 miles I found quotes to be exactly the same, suggesting they're probably not entirely risk profile based as I mentioned briefly a moment ago, but asking for 3,000 miles has consistently been around 32% cheaper than asking for 10,000 miles in my experience. So those are some key factors that I've spotted, and I won't bore you by going through a shed load of details on how to get cheaper insurance in this video. Instead, here's a list of the best ways to get cheaper insurance as a young driver based on 2 days worth of research into how different variables on Compare the Market affect insurance prices. That is going for a 5-door car over its 3-door equivalent, keeping the value are provided by the comparison site for the car and not playing around with it to be more or less expensive, adding family to the insurance as I mentioned, not keeping your car on the driveway, park it on the road instead, doing the quote a few days before you want the insurance to start, aiming lower on the annual mileage, having a smaller engine, and where possible, if you're moving house, look at potential insurance quotes in case you're about to screw yourself over. If you want to see that video and all the research I did in full, check the link in the description and the pinned comment below, and if you want me to do all the research required to work out exactly how to get cheaper insurance as an older driver, as in people 25 and above, get this video to 1,000 likes and I'll get researching. So hopefully you feel a little more informed on how insurers give you quotes and have a bit of an idea of what you can do to reduce your quotes. If you found this video interesting or it helped you at all, let me know in the comments down below. Subscribe as well if you're new and hit the like button for the YouTube algorithm. I would really appreciate your support. Massive thank you to the patrons as always, and to you guys as well for watching. I will see you in the next one.
Listen.